Trading is one of the hardest skill sets to understand, but once you understand it, you'll have that skill set forever. And in this video, I'm going to show you how to make your trading just a little bit easier. If you guys are new to my channel, I would appreciate if you guys would hit that subscribe button for me. Also, like this button. Every time that you like this button, it pushes this video out to more traders. And I want you guys to understand one thing. The reason as to why I make these YouTube videos is for my legacy. If I were to drop dead today, these videos are something for me to be remembered by. So that's why I solely do these YouTube videos. Also, if you guys want a free Forex training, yes, I said free, click that link in the description. And without further ado, let's get into my computer. Hope you guys enjoy the video. There are not a lot of skill sets in this world where you can make a couple $1,000s in a couple of seconds, and that's why I love trading. I did not trade today. I looked at the market open. I'm just like, yo, these are pretty choppy markets. I'm not clear on what's going to happen, so I avoided trading the markets. And here's a little hack for you guys. Trading on Mondays is usually the worst trading day. The best trading days where you guys can trade is honestly on Tuesdays and Thursdays and even Fridays. So when it comes to trading, guys, figure out what are my best trading days and really go hard on those days. Now, what I want to show you guys in this video is a very, very simple trading hack. What we need to do though, let me write this out on a screen. What we are looking for, there's something called, let me put this out, okay? I'm going to write it out for you guys so it's very clear. There's lower highs and lower highs and higher lows. You're probably wondering, Colt, what are lower highs and higher lows? So I like to see the market in one specific trend. There's a downtrend. Then we have an uptrend right here. But as the market is falling lower and lower, it has to kind of gain momentum by going up to a previous point and then dropping even lower. So it will kind of look like staircases where it goes down and it forms a lower low, then we have a lower high. Then it forms a new lower low, and then a lower high, and then a new lower low. In reverse, for the uptrend, is it goes high for a higher high, then a higher low. Then it goes for a higher high, and then it goes for a higher low. Then for a higher high, and so on and so forth. But there's these points that you can get a re-entry on, these higher lows, and where you can get an entry on these lower highs. And in this video, I'm going to show you exactly how to do that. Now let me erase this and let's get to the actual chart so you guys can see. So the first thing that I like to look for when I'm trading, and this is very simple, is I like to just see one type of trend, like a clear downtrend, a clear uptrend. And this is not going to occur all the time, but it occurs most of the time. And like I said, guys, it's not always going to be super clear, but I'm going to show you guys on a clear example. Okay, so this is a nice example right here. Now, we need to understand a couple of things first. We have this low, then we have a new high. Then we have a lower high, we have a new high at the market open, and then a higher low. So when I'm looking at this, what I want to do. This video is sponsored by my program, FX University. Go to the link in the description to sign up, or there should be a link on this page. Once you go to join now, you're going to go to get started. And once you do, we're going to give you a code for 15% off. Go right here where it says to add promo code, type in FX1 and click apply. I want to find the previous high, or I want to look at the previous high with the previous low, and that's going to give me my confirmation for my new higher low. So what I'm going to do is I'm going to grab the fibs right here, the fib retracement, and I'm going to give you guys my settings so you guys can use them. So if you want to copy my settings, and I'll explain how to use it, be patient. This isn't something that's going to come immediately, but you guys will understand it. So these are my fib settings if you guys want to take a picture now. And if you guys also want to take a picture right now. Now when I'm using these fibs, what I want to be looking for is I'm going to be looking for our previous higher low and then our new higher high. So I'm going to grab the fibs from this, basically this point of support to this point of resistance right here. And what I'm looking for is this to hit one of our key levels. Now the key levels that we're looking at are the 0.62, the 0.705, and the 0.79. These three levels are our key levels on the Fibonacci, but my favorite one and the key level that I usually look for is the 0.62. And it's this red line right here. So when you see the market hitting a high and then coming back down into the fibs at the 0.62, and you see a reversal candle like you did here, wow, that is a perfect setup. Now we need to understand something about the Fibonacci's. This is a mathematically derived indicator. And we have all these prices in the market, like right here, 33,750, 33,500. So this is giving us the highest probability of where the market is going to go to next. Here's a major hack with the Fibonacci. I have on my settings, if I go to this and then this right here, I have on my settings this level, the negative 0.27. And this level acts as our take profit. I swear, every time that you set up the fibs, if you set them up correctly, the markets will always go to the negative 0.27, and that's where I usually have my take profit at. Major hack right there. So we have all these levels with the fibs, and the key level is a 0.62, but let's do like a replay mode. Let's pretend that these are present times in the market. Okay, we see our higher low, then a new higher high, comes down, forms a doji right at this 0.62 level. This is where I would take a long. I would buy by market execution once the candle closes. I would have my stop probably right below the 100%, and then my TP at the 0.62. Now we're going to play it back. Boom. You know that the fibs are lined up correctly, and when the market goes to a certain level like the 0.62, and it moves away very quickly. We can see we have it moving away very quickly right here. That's giving us a ton of confirmation that we set up the fibs correctly, and that is actually going to start pushing up even more. And boom, TP hit literally within 30 minutes. That's what we want to be looking for, is a very quick reaction off these key levels, especially the 0.62. So now let's delete this and let's find another example, but I want to find a better example for you guys, a more clear example. So what I like to look for are like really clean trending markets just going lower and lower and lower. So these are decent markets right here. The thing is, if we're to put our fibs from this high to this low, we can see that it stretched past our key levels and it even hit our 100% level. So if you had your stops above here, that would be good, but I don't like to see it surpass these key levels. I wanted to see it hit the 0.62, 705, or 79 and then reject, but it didn't do it there. So we can possibly look to the left even more. We have all these little lower highs being formed. So we have this one right here. We have this previous high. Then we have this low right here. So if we zoom into this, we can see. So this is nice. We have, let's like really rewind this so we can see. So we have the market forming a lower low, then a lower high. Notice how it's hitting this candle, or hitting the 0.62. It has a wick on this candle. This candle's wick is actually hitting our 20 EMA, which is giving us confirmation of a reversal. And then right after that, watch what happens. Boom. Quick reaction. Once again, if you want to know you're on the right side of the market with the Fibonacci's, you want to see a very quick reaction away from the 0.62, the 0.705, or the 0.79. So it's very key to be looking at these levels to see if the market is reacting off them. And hey, you can just line up the fibs. Maybe you don't have to like try and predict the whole market. What if you're looking at the market like this, and this is what the current markets look like? And like, okay, well, let me see. We have this previous high right here. Then we have this low right here. Let me just line this up. And you're like, oh shit, the candle actually rejected our 0.62 that we moved away. Let me just get into a sell right now. Like, I'm confident. I think that it's going to just keep dropping. I'm going to have my stops right above this high. TP at the negative 0.72. Obviously, this isn't a huge TP, but hypothetically, let's say that's a trade. And you're like, okay, well, Okay, good. Oh, TP was hit. Cool. So I really use the fibs. It's just extra confirmation to tell me, okay, I'm on the right side of the market. We're rejecting these levels and we're going to keep pushing further down or further up. I hope that you guys enjoyed this video and got some type of value. If you guys want personal help from me, follow me on Instagram and shoot me a DM. I'll see you guys in the next video. Peace out.